Ladies and gentlemen of the crypto space, we're live on a Monday, January 3rd at 11:33 a.m. First trading day of the new year. Let's take a peek at the charts. Let's look at the assets that we know are outperforming. Capital flows from underperforming assets to outperforming. That is a very broad narrative that is very applicable to up and down. And the sentiment we have for the equities markets and clearly what's playing out in the crypto space, they are outperforming. And for instance, is very much on the cards a stock market crash. It's extremely overextended, so if they become underperforming assets, I'm much more interested in the destination for capital. If outperforming assets become underperforming assets, the capital rotation occurs from the underperforming asset to the outperforming asset. There's a great deal of narrative heading into 2022 to suggest capital rotation from clearly outperforming growth stocks to value stocks or to commodities and miners and precious metals, so on and so forth. It's on the table. Well, whether it plays out or not, as I think it's quite mutually exclusive to the directionality of the crypto space as a whole. It's not necessarily that's entirely a decoupled relationship. There's clearly a loosely coupled relationship. We've had very tight correlation at times, and we've had inverse correlation at times. And Forex markets just make it even more complicated to try and understand the directionality of the market of interest that we talk about, the crypto space, but it's all loosely related. We don't know if correlation holds. We don't know what the future holds. We speculate, and I have very strong feelings about directionality of various markets, considering our base narratives, capital flows from underperforming to outperforming assets. What happens if something remains outperforming in the case of dollar bullishness? What happens if something remains outperforming in the case of an equities market correction of rotation from growth stocks to value stocks? Where does the capital flow? Clearly, dollars aren't outperforming. They may outperform temporarily. Maybe treasuries are outperforming. They tend to outperform temporarily. Transitory outperformance, as we've seen basically throughout the last 100+ years. That's just what it has been. The dollar is a constant decline compared to everything, and that's the name of the game. These very broad macro observations help us make the best decisions possible, help us think of where to deploy our capital. And for myself, the crypto space seems to be the most rational place to deploy capital. It's basically a combination of a tech play. It's also a sector of financial activity that's not directly ingrained or integrated with legacy financials. There's a degree of separation. I mean, as I said, the tech play is extremely strong, and tech is significantly outperforming in the markets, the equities markets, that is. And it just makes sense because it's more than just tech. It's more than just a technology play because we're dealing with financial innovation, disintermediated financial services, and none of this shit ever existed historically. You could not do this without the crypto space. You do not have businesses that offer this kind of access, this kind of disintermediated access. It just doesn't exist. If you want to deploy capital to a Forex market and get transaction fees, you can't. Period. If you want to lend capital, you tend to need like traditional banking license and you have to set up a company, and it's impossible. It's not possible to do any of these things in legacy finance. And just there's nothing to be had with REITs. They're just valueless. They've been reduced to basically stagnant equity. They do nothing. It's all negative real yield on anything that's less than 10%, and that's probably the vast majority of the market unless you head excessively out on the risk curve. I mean, the golden child for REITs is Realty Income Corporation. That's overwhelmingly negative real yield. That's it. That's the story. And I played with REITs a fair amount back before the turn of the decade, 17, 18, 19. And, there's a narrative to be had about them because they're revenue producers. They share the vast majority of revenue with stockholders, but there's way too much stock in circulation, producing ridiculous returns for individual stockholders. Well, ridiculously low returns, that is. It's just opportunity cost. It's just maximum opportunity cost. So you have the capital flows from underperforming assets to outperforming, and you do your opportunity cost analysis, and really all that shit points us to the crypto space for having the most outperformance. It's not the opportunity cost. Everything else is opportunity cost compared to it. That's the deal. As someone my age, well, maybe I'm right in the middle. I have plenty to lose, and I'm not 20 and just moving out, just done with college. No debt, no nothing. So I'm not in that position. But um, my engineering history, maybe it's my experience going through various bullish periods in crypto history, and my knowledge and macro investigations that I've done lead me to this space as being the best risk reward and the place that has assets that are going to outperform everything else. So that's really what Raoul Pal talks about. A very macro big, strong macro perspective that he offers. And this is the place for outperformance. There's going to be meaningful outperformance in equities markets as well. Tech may continue to irrationally outperform, but as Kathy Wood talks about, maybe it's not irrationally outperform. Maybe tech is significantly altering the face of the planet with regard to human behavior. And I have plays with battery metal miners, and I think as tech evolves and human behavior changes, I think they need materials, and that's my rationale there for the battery metal miners. If you look at the battery metals prices, they're absolutely soaring. Absolutely. The demand is monumental, and the supply isn't there. So I expect that to be good going into the 2030s. So that's the shit with the legacy financial system. You have to have ridiculous time horizons for narratives to play out, and that's traditionally the case in many regards with old school macro plays. Uh, Much longer time horizons than the crypto space. The pace of iteration and development and deployment is significantly faster in crypto than anything I've ever seen before. I mean, literally, I have a time horizon for my equity stocks for 2030. Set time horizons. They need to be rational. And the time horizons for the assets that I talk about, that we talk about, are not a decade in DeFi. These are assets that are borderline critical mass, and they're experiencing asymmetric appreciation, and they produce extremely positive real returns from sustainable sources of revenue, transaction fees, debt interest payments. Just the growing monetary velocity is indicative of capital churn, capital flow, and that capital flow is capturable in a disintermediated fashion, which is absolutely unprecedented. Ah, oh, got me all fired up this morning. Woo! Let's pop it over to the main screen, see if we could give some juice on the charts and go over some comments. That's a deal. Henry's in the house. A pleasure. Thank you for the New Year's wishes. Dan, always a pleasure. We'll see what Danny's thinking. Clearly, he has quite a significant change with regard to role and his influence on what projects are being worked on, maybe higher level strategy with regard to tokenomics and product deployment. So it may be the case that he has a capacity to deploy something that he typically or a week ago didn't have the capacity to deploy, and his just power and influence and relationships is just growing stronger and stronger. So he's working with very powerful people. He's talking with Andre on the release of whatever he's working on, and that should get everyone excited. How to capitalize on it is not necessarily obvious. We're in speculative territory. We know the network. We know Phantom. We know he has access to probably the most extraordinary DeFi toolkit, period. Between Sushi, between Abracadabra, between Popsicle for liquidity provisioning, Abracadabra for lending. It's not really lending, it's collateralization and debt. But obviously, Sushi has toolkits for lending, and that's a bit different. It's more of I guess, a money market, except in DeFi, we have many types of money. That's the big thing that I guess gets overlooked. A money market in traditional finance is fiat, but a money market in the crypto space, in the DeFi space, is dealing with these assets because these assets have properties of currencies. Ah, I feel like I've been beating the drum for like 2 years now with YouTube. We're dealing with assets that aren't assets. We're dealing with assets that are currencies but aren't currencies, and it's just extraordinary. The properties of of the things we deal with are of assets, currencies, commodities, derivatives, all rolled into um, bundles of sorts. Maybe we're dealing with all derivatives, and the derivatives have varying properties of the things we just talked about: assets, commodities, currency, so on and so forth. I don't know. I don't know entirely how to define what we're dealing with, and clearly the government doesn't, and that's why this regulatory shit show is occurring. They don't even know how to define it because it's not necessarily fitting into a nice, neat box. Nah, it doesn't fit into a nice, neat box. But that doesn't mean we can't understand it, can't digest it, can't attack it, can't capitalize on it, can't position ourselves to attach ourselves to a narrative and let that shit play out because this is the strongest narrative going on. Legacy equities and the crypto space is the DeFi space. By far the strongest narrative. Disintermediate everything. Give us access. Let us be business owners. That's the way I look at it. Larry's in the house. Always a pleasure. Patrick's in the house. A pleasure. Crypto bets. Good morning. Andrew Thomas. You mentioned synergy of these assets. Is there any worry they're all propping each other up? Well, there is always risk in that regard, but that's a very broad statement. I think they're connected yet interconnected. These systems are coupled, loosely coupled. It's a very software technology term, and that like a Bitcoin derivatives cascade, cascading long liquidations is generally going to trigger fear and sentiment across the entire crypto space, causing liquidation to the relative safe haven of fiat or a stable coin denominated in fiat. And that's what happens. With regard to liquidations, let's say abracadabra, if there's a swath of liquidations, a good part of what Danny works on and team is soft liquidation, so it's more friendly and less destructive of capital. But who gets the vast majority of liquidation revenue? It's the protocol. The protocol gets the revenue, or a protocol captures a fair amount of the revenue, and that's profound. Never before in history has the general public had access to this perspective of financial protocols. If you got derivatives, if you got margin lending on Fidelity, Fidelity got the liquidation and the fees and all the shit that is left over after a collapse. But in DeFi, we have access. We have disintermediated access to these systems. That's the deal. Patrick, yeah, tempted to take 1% out of CVXCRV and bridge MIM over to Phantom for giggles to see what happens. Speculative territory, but I think there is always rationality to deploying 1% risk on. 1% to 10% changes everything, and you get to test. That's how you grow. You experiment to see what something does, and 1% is a solid number to do things with. 1% goes to zero, it doesn't destroy you. 1% goes to 10%, it changes everything. That's why it's such a meaningful number. Larry, are you in stablecoin position right now? If not, why? What is your thesis? No stablecoins? I don't need it. I want to own my businesses. I consider these businesses. We're looking at Convex right here. I haven't really talked any technicals at all, but these are revenue producing businesses. I expect the revenue to increase over time, and I expect the business valuation to increase over time. And as I've talked about historically, I think the business valuation is a red herring. Like, why would the hell would you want to sell a business? Even if there's depreciation in the business, what's pertinent is that the business still makes money. You don't sell a pizza shop if the damn property value collapses. No, because the revenue of the business, that's the way you value a business, how much money it's generating, not the liquidation price of the property. A lot of people say that analogy doesn't hold up because clearly the valuation of a business property value is only a part of it. The real value is the revenue stream, but I think an analogy doesn't have to be spot on. What's pertinent is that as a potential way to understand the way my brain thinks of these operations as businesses. Imagine that a business valuation has property value as a predominant component. Not that the business valuation is just the revenue stream, because clearly maybe the property value tanks in real world, in IRL, in real life, but it's irrelevant because the business's valuation is still based on revenue stream. So imagine that wasn't the case. For purposes of the analogy, for folks that are stickler to, and Noah, your analogy isn't spot on, damn it. So I have no need for stablecoins right now, Larry. These assets are revenue generating. They're producing revenue that I could have never imagined. And from the revenue, you could accumulate stablecoins. You accumulate cash positions. And whose ideology is that? That's Warren Buffett. You think Warren Buffett sells his businesses when there's a deflationary impulse or the markets are afraid? No, he's accumulating cash from cash flow, cash flow, cash flow. And you have a bank account and you have a treasury, and you're like, oh, okay, maybe there's a good time to deploy it. Buffett waits. He is the most patient investor in history, and he will wait for discounts. And that's why I always talk about, is the market at a premium or is it offering discounts? So Buffett deploys when there's deep, 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 deep discounts. You wait for a March 2020 Bitcoin capitulation, and that's when you're going to get the biggest discounts. Maybe that's what some folks want to wait for. I don't think most people would like me talking that much patience. And I don't think that much patience is necessary. I think Buffett's ideology is on point for the DeFi space, but I think the speed, the volatility, and the directionality of the market need adjustment. So I very much subscribe to building a treasury full of stablecoins based from cash flow, but I don't think waiting years as he has, is the way to achieve the best performance in the DeFi space. It just moves way too fast, and I think there'd be missed opportunities uh, over the course of years, like 5 years, 7 years, 10 years. How long has he been waiting? He's been waiting since 2010. Jesus. So I don't think it's his ideology one for one is deployable, but his ideology conceptually is spot on, in my opinion. I remember you speaking of the Buffett play a lot in the past few months. I hope that clarifies. I didn't read that, but obviously I just talked about it. Henry, any concern if Danny Ohm buy up the majority of CVX? Would they stop giving bribes? Unknown. I'm not largely exposed to Convex, albeit this chart looks absolutely ridiculous. Above the TWAP on the daily, Tetranode's wick, well, he liquidated his LP position, really did nothing. This thing is just on trend with the fourth bar of this fork. And it was just the wick, so it was a failed breakout. The market has completely consumed everything that he liquidated, and it is completely on trend according to the time-weighted average price. This is an extremely strong chart. Now, what plays out with regard to bribes? Who knows? This is why you're never all in. This is why you don't spread too thin. You have diversification, convex curve, and then there's the other narratives that we talk about. So this is the art of portfolio construction, and this is the art of position sizing. What happens if that's the case, Henry? What happens? The convex, we'll see. You only know in hindsight how it plays out with regard to price action. And personally, I have a decent sized position. What do I got? I got a nice sized convex position. I have 10,000 convex sitting around. I'm not a mega whale like Tetra and a lot of boys, but it's not zero. You know, not zero. I'm not a guppy. I'm not a goldfish. I'm not a little micro mini guy. I'm just certainly not a blue whale. That's a nice size position. It makes me happy, and the position size is decent. Do I wish I had more? Probably, but I would dare not cannibalize other positions, which I personally think will outperform. I think Convex, the narrative, Tetranode, spot on. I think the bribes just go up, 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 and up, and I think Convex significantly outperforms itself. I don't think it's going to depreciate, but I think Curve. I think Curve has a stronger narrative, and Tetranode highlighted the way he thought of it. And Curve by itself is a rat race. VE Curves clearly is not a position to be had, but CVX CRV as a derivative makes it an extremely viable position. It's possible that the price of Curve outperforms CVX. It's ultimately the base primitive part. It's basically the MMT currency producer in the relationship. Um, so that's where I assigned my portfolio balance. I opted for the CVX CRV play over CVX, and that's not what Tetranode did, and that's okay. And we'll only know in hindsight which performs the best, because we know that he thinks CVX is going to outperform and the bribes go vertical, and the bribes going vertical means CVX is going to really outperform because people want exposure to the bribes. What's the yield on CVX CRV? CVX! What's the yield on CVX CRV? CRV. So as the price of CVX goes up and the price of CRV goes up, the yield on CVX CRV goes up. And what does that do? That drives the purchasing of Curve to lock for CVX CRV. So as the yield on CVX CRV goes up, the price of CRV goes up because people want exposure to the CVX CRV derivative. How about that shit? Oh, I mean, what they call it? Not a feedback loop. They call it the cycle. They've been throwing around a term on social media recently. Um, Crypto bets, Frog Nation coming to Phantom. Check out the TVO and DeFi Llama for Phantom. Yeah, I expect it to be big, but what do I always say? I always say that what's better than targeting a particular platform, targeting protocols that are just cross chain. And where are we? What do we talk about every day? We're talking about, well, not convex, but well, not yet. But Curve clearly extremely cross chain, and what Curve is talking about with regard to voting and the gauges on the L2s, that's going to just open up a can of worms to potentially convex on the other chains as well. So my focus is solely on cross-chain protocols. Why have exposure to one chain when you can have exposure to all chains? So I did take that sushi position when Danny's proposal went through, and that is just I have a high opinion of it now. Clearly, it's taking a bit of a beating. My entry was probably like at 875, 880. It's about 890, give or take. So I was a little negative on the position today. If it takes a hit, it takes a hit. We know likely where it's heading. That's the speculative bet. It was sized accordingly. It's at 1.5%, so it's not a significantly overweight position. It's not necessarily the raw spec position of a 1% play that I always tell you guys about. Sized at 1.5% because it's freaking sushi. So you have a little bit more confidence than really being out on the risk curve with untrusted contracts, untrusted developers. Clearly, the contracts are trusted, the developers are trusted, the community's trusted, everything about it's trusted. So you can overweight the position a little bit in that regard. At least that's the rationale I deploy why it's slightly overweight. Brian, Happy New Year. It's a pleasure. Dan, Tetra gave play-by-play on exactly what he did while Dopex was outperforming. Yeah, yes, he did. He's very transparent. I think he would have done much better selling the CVX OTC. I'm sure that he would have had someone to sell it to. He probably just wanted the full market price premium rather than the discount that you need to offer for the OTC deal. But, it's okay. I think the market and the price action looks healthy. And his liquidation, uh, literally, if you just ignore it, it's just wicking over this fourth bar of the fork. I mean, his liquidation is basically trivialized with regard to the overall price action of the asset. TWAP is inclined rather than decline and is pushing towards the fourth bar on the fork. This has overwhelming bullish overtones to it. Let's take a look at Curve real quick. So Curve had a breakout this morning above the fourth line of its fork. We could zoom out to the weekly. I have the fork drawn on the weekly. Yeah, that looks good. So there's just overwhelming bullishness here. I would love to see it go above the top green line. The top green line is the previous local high. I say local high because obviously it was trading on centralized exchanges at like 30, 40 bucks when this thing was launched. So technically it's not the all-time high. But this is really the all-time high because back then it was in hyperinflationary decay, so it didn't really count. What's most pertinent is this right here. You see this? Look at this. I mean, literally, this shit, you can't make this shit up. You can't make that shit up. I mean, it turned a previous resistance at an unimaginable price point back in August of 2020 into support, coming off an absolutely jaw-dropping wick. I mean, that is a jaw-dropping wick. Let's take a look at the percentage on this bad boy. I mean, this was a 30% wick. Absolutely jaw-dropping. So the price action at this height, at this price, is absolutely jaw-dropping on the weekly. So what do we have here? Basically, it was three resistances on the fourth bar of the fork with support. So basically, it's going to probably continue to range until a breakout or a breakdown. There's no reason you can't have a breakdown. But we're well extended from the weekly TWAP, which is above about the first bar of the fork, which is still one heck of a price point, history considered at $4. It would be a heck of a drawdown to get down there. But you can't make this chart up. 1, 2, 3 weeks of resistance on the fourth bar of the fork. I mean, technically, this was probably resistance as well. This set up the channels. And big support on the first bar of the fork, 1, 2, 3 wicks below it. The TWAP is right on it on the weekly. And the weekly chart is the most important perspective. Intraday gives you some insight, but it tends to have a lot of noise. You see it. I mean, 1, 2, 3, 4 hits on the fourth bar of the fork, but the weekly is really the most meaningful. And that's like, Buffett takes years to figure out what to do with positions, but the weekly or maybe the monthly in the crypto space gives you a very good indication of where things are heading, where upside is pointing and where downside supports exist. Look at this. We got a curve is relatively new. I mean, this is just incredible because you barely have a TWAP on the monthly. Is that a 50 SMA? I think that's a 50 SMA in the background there. That is a 10 SMA in the background there. So on the monthly, it's significantly above the 10 SMA with the TWAP below the fork. We could have extreme bearishness, and that's a good target, 289 at the TWAP. That'd be one heck of a depreciative cascade. Odds are, considering the functionality, the PA of the asset and the protocol, you'd see a massive wick down, and you'd probably find support around the monthly TWAP, and that's some shit that would make sense. It would be an extremely depreciative event, but it would just make sense. Dan sold a bit to buy again lower. Yeah, that's the name of the game. Buy low, sell high. Van Tech, Elaine. Vark Tech. I don't know what the heck that means, but I might like it. Here for it. Happy New Year, Noah. Thanks. Always providing so much value. Is your curve play only in convex? Can you clarify the play? There's nothing significantly complicated about the play. It's just a CVX CRV position that I basically picked up around 40 cents, give or take. Is that a submarine? Great store of value. Is that maybe one of the chart formations? No, and not financial advice, of course, but how do you think about retirement savings? The few crypto options just let you buy and hold on Coinbase seems better to just opt out. The crypto options on Coinbase are completely useless. They tend to rehypothecate the assets, and there's relatively not sparse disclaimers, but they clearly state that there's risk of loss, and there's clearly risk of loss in the DeFi space. But where do you think that Coinbase is deploying the assets to get you that ROI? They're using DeFi. That would be or maybe like leverage on centralized margin platforms, but there's probably regulatory compliance that doesn't let that happen. So they're probably using DeFi to get those returns. PM, I finally made it to a live stream. It's a pleasure. Welcome, welcome. Daniel, Happy New Year. When Curvance launches, would you be interested in taking another layer of risk? No, I will not. Will redacted investing in Curvance give me confidence? Yeah, yeah, that is decreasing the risk profile, having a trusted third party become interested in something that's further out on the risk curve. So there's rationale in your observation and opinion. Um, I always say can't own everything you want to own. I am in a position where I don't need to go out on the risk curve to find something that's speculatively going to outperform. You guys, I know, are looking out on the risk curve, and that's okay. That's okay. And this is what Daniel just wrote there. If you're down further on the comments, scroll up to what Daniel wrote. That's the type of thing that provides confluence, suggesting a potential decreased risk profile. You want to find relationships, partnerships, momentum, reasons to potentially trust the contracts, whether maybe it's audits, maybe it's the developers that are responsible for creating the contracts. So good work, Daniel. I have no interest in the position, but I approve of the relationship you saw and the implications of that relationship on your risk analysis of a potential position. That is rational. Mickmon, how has CVX performed so well with so much CVX rewards? Who did you say was buying it? People that want revenue. When an asset pays you to hold it, it will sell less than an asset that does jack shit. If an asset's only function is to liquidate in order to capitalize, people are going to sell it. They're not going to restrain themselves. If there's an opportunity to sell high, they're going to sell it. If an asset goes up in price, the only reason it won't be sold is if that asset is paying hand over fist to not be sold. And that's exactly what's happening with the bribes. The bribes are paying hand over fist, encouraging less people to sell than more. And if there's less sellers than buyers, the price goes up. And that's exactly why it is doing what it's doing. Between whales and seals and orcas like Tetra and me, which is like what am I, like a tuna? Like a tuna or some shit. So I'm like a tuna. You don't sell this stuff. You accumulate and use it, and you're selling the revenue maybe and accumulating a treasury, as according to Warren Buffett's strategy. But that's about it. You're not selling the position, the valuable position that produces cash flow. Yeah, Liquid Driver looks cool, Mateo. Same situation with Curvance. Liquid Driver has significantly appreciated in price. I don't need to go out on the risk curve to gain exposure to it, and that's just me. But do your own due diligence. Do what Daniel did. Look for reasons that the risk profile can be reduced. Look for partnerships. Look for momentum. Look for the audits. Look for the developers. And that's how you go out on the risk curve responsibly. PM, AR for retirement savings. You have looked into charitable trust. Yeah, that's there's plenty of ways with regard to tax crap. Fubear, lots of Danny Andre rumors swirling about FTM. My body is ready. I think all of our bodies are ready. We all know what they're capable of, so I think we all are itchy to see what they've come up with. Action theory. The volume on the CVX chart is interesting. Well, that's the old and the back. This stuff doesn't count. This is a calculation. So it's misleading in that regard. So just ignore that noise. What's your thoughts on Bancor V3? solid team. The risk profile is basically zero with regard to contracts. This is one of the most trusted teams in the entire crypto space. Price action, there's a risk profile. It has a history and precedence, and it tends to uh, appreciate and then depreciate very quickly. And historically, it has gone very high, 10, 15, 20x, and then has a significant retrace. That's the history of the asset. The tech, man, that's serious tech. Nate Hinman's cool, and the team is smart. Udi is smart, and I spent a fair amount of time uh, on the protocol, and I've talked with them and talked with the team, and I have a high opinion of Bancor. I have an old position. For what it's worth, it's relatively small for the portfolio, sitting at 0.27% of the portfolio, and it's all good. That's back from like early 2020. I've had that since. That's something I'll sit on. That's the deal. My man, I'm back. I'm late to the party. Did you already go over your entire portfolio? I'm currently in USD and going to make my portfolio for 2022 and need some guidance. My portfolio is not the portfolio balance any rational market actor should ever deploy. You never copy someone else's portfolio structure, because a portfolio needs to emerge organically. If I tell you I have 30 something percent of my portfolio in Abracadabra and Spell, that is the last thing anyone should ever buy, because that's not a rational way to craft the portfolio. You want to plant seeds. You want the seeds to grow into mature plants. And then once they're mature plants, you could rebalance, tend the crop, move some plants from here to over there, and do all that shit that a good gardener does. So my portfolio structure is certainly not something anyone should rationally deploy no matter what. Sitting at 37% curve, 35% spell, 7.7% frac, 6.7% popsicle, 4.6% convex, 2% keeper, 1.82% cosmos, 1.77% sushi, 1.71% ren, and then it goes down from there. Oh, and how about damn, Syscoin has been cranking it. So if Syscoin was on my main portfolio, Sys would be number 10. Sys would be about 1.4% of the portfolio, I think, give or take, rough estimate. So Syscoin has been significantly outperforming. A buck 21, geez. I think I got my Sys at like 7 cents. That thing was collapsed. I grabbed the Syscoin Masternode in dude bear market 2019, and it's good to see. It's nice to see it catching some new life with a strong narrative. Probably a very underestimated narrative with an NEVM, which is an EVM compliant smart contract network that they've been building. But Syscoin is backed by hash rate of Bitcoin. It's merge mined with Bitcoin, so it's literally technically a Bitcoin EVM compatible layer 2, which is one heck of a narrative. So Syscoin's up for me about 18x on the money. So it's at a significant premium. You have to definitely look at the technicals to see if there's any discounts, but uh, shit, that's a heck of a premium. It's up, yeah, 3,490%. Damn, am I really up 34x on the money? Jesus. All right, fine. So I've underestimated what it's done. I think Syscoin has accounted for all my losses from 2017, just that one position. So that's nice. So it's something to think about. I think it has significant merit. It's probably the strongest asset from 2017 era Masternode tokenomics, and they've continued to iterate. And it has potential if NEVM catches on and liquidity and the bridges come online and all that jazz that we know has happened with Avalanche, Phantom, Arbitrum, Optimism, so on and so forth, and all that shit. All right. Um, Barry DGB is in the house. Always a pleasure. Booster, Captain, what do you think about the narrative around Liquid Driver buying up in spirit? Cool. We'll see what happens. I mentioned my thoughts on Liquid Driver a little bit earlier. Malcolm, the flywheel. You got it. That's the deal. That's the word I was looking for, my friend. Thank you very much. One curious view. Happy New Year, Noah. Have you seen the dope packs are entering curve wars with option on gauges? Awesome. You know what I'm interested in? Curve. That makes me bullish on Curve. If they're entering the Curve wars, that means they're going to be accumulating either Curve or the derivatives vis-a-vis Convex, and that's going to put appreciative pressure, consumption of circulating supply on Curve and Convex. Yay! One protocol, cross chains. That's the beauty of focusing on protocols that go cross chains. You don't need to focus on a particular ecosystem. You can focus on a protocol that spans all the ecosystems. AR, assume your sushi position is staked as X sushi. No, I went for tokamak. Shisha, Geist has been printing money. I hope so. I've kind of forgotten about it. Let's take a look real quick and see what it's doing. Phantom, Phantom, Geist. Let's take a look. I haven't looked at it in like a month and a half. Oh, that's nice. That's good to see. Okay. Geist has been printing money. I've I literally haven't looked at it in like a month and a half. That's nice to see. All right. Oh, all right. Thank you for letting me know. I wonder what. Let's see what Blizz is doing. I haven't looked at Blizz and I don't even remember how long. Same thing as Geist probably. Avalanche. Yeah, Blizz just got completely annihilated. Jesus. Daily platform fees $25. What the fuck? Geist is looking strong and Blizz is looking completely burnt. Oh, all right. Is what it is. Is what it is. I mean, who's to complain? $954 a week. That's ridiculous. So, it's just the kind of thing I'm going to let sit. I haven't done a thing. I've done no transactions in 2022. I did no transaction. I did one transaction for December. I took the sushi position. I've been hands off, in cooming, minimizing the crap out of my activity. And that's the strategy that I'm going to do going into 2022. Minimal activity, strategic, surgical, well thought out, rational to an extreme. I'm going to think so hard before I take an action, I'm going to barely get anything done. Killis, all the best in the new year. Always a pleasure. Always a pleasure. I got to get to my AskViz. Maybe got a little something up there. Patrick Spell at V2 Pool just launched on Curve. Woo! Damn right it did. That's exciting. Vasco, Happy New Year, Noah. Thanks for all the alpha you're dropping. It's a pleasure. Best part of my day. If anyone buys Curve at 289 and it depreciates further, it's not Noah's fault. DYOR. Yeah, please, for the love of God, PM. Everyone listen to PM right there. Ugh. Don't get, I got to say something, meaning I got to talk about the charts. And that's what this indicates, meaning there's no reason it can't go down. But this chart is indicative of there being support at that price point, 292. It's not what I'm saying. I didn't say that. That's the thing. Look, check out the semantics that I'll clarify. If anyone buys Curve at 289 and it depreciates, I'm saying the chart says there's probably support here. Noah's not saying it. The chart says it. So it's not Noah. Thank you, PM. I appreciate it. Grid Rain 741. Andre C. pumping FTM with his hint on crypto Twitter. Yeah, definitely good vibes. Frog Nation vibes going on. Heirloom, go Curve. Chart looks absolutely ridiculous. 3.78. 6 point. Oh my God, dyslexic. $6.38. That's an extraordinary price point. Let's take a look at Spell real quick. We're going to wrap up the stream in a couple minutes. Chilton Bay, could you give a TLDR on Curve Wars? Protocols are buying Curve. It's not people anymore. Protocols don't buy to sell. Protocols buy to accumulate. Protocols buy no matter what, and they especially buy when there's discounts. The appreciative pressure is therefore according to that. When there's discounts, Curve and CVX will be bought. So the price action on Spell is extraordinary. This green line right here is a previous resistance, which literally flipped support at the close of last week. A strong flip of support. 1, 2, and 3 if you consider the blow off top. So that was obviously irrational exuberance carrying us significantly over the previous high. So I would say 1, 2, 2 resistances, flip support, and you could talk about the blow off top because that was a significant deviation from the support region that has been established with one weekly candle. The chart looks extraordinary. This 2.189 cents held as support. You could see a retest. It could try and test it again. But with precedents that people bought at that price to hold it as support, it's starting to set up a floor. This is a price that people are willing to buy. Why? Because last week people were willing to buy at that price. And that's the psychology that is expressed when you're looking at a chart. Now, the more times it goes down to that price point and does not go below it is indicative of the fact that market buyers are willing to enter the market at that price and not wait till it goes lower. That's the power of the charts. Chilled and baked. Happy New Year. Always a pleasure. Vasco, when Andre and Danny are launching Noah, I don't know entirely, but I'm pretty sure it's from their stable of protocols, meaning it's probably involving sushi, it's probably involving abracadabra, it could involve popsicle. I mean, they're all connected and they're disintermediated financial services, and they have a tightly coupled functionality and completely intertwined narratives at this point. It's absolutely jaw-dropping. Let's go starting what's available and what's starting off 2022 more powerful than I've ever seen, and it's not just crypto anymore. We're talking about legacy financials and the macroeconomic system. It's all connected, and the picture of where we're heading in 2022 is absolutely mind melting. 76 people in the stream, 19 likes. We can do better. We're going to wrap it up 12:20 p.m. on a Monday, January 3rd. I thank you all for joining me. As always, tell everyone to subscribe. After party on Discord. I'm going to be jumping on Discord. We're going to be talking all day long because that's what we do. We're chilling on Discord, making rational decisions. Great group of people, best group of people that I'm grateful that I've been able to bring together, and everyone together makes rational decisions. It's the largest rational Discord group by far in the crypto space. Absolutely incredible people all making a difference together. I'm going to get to my Ask Vids ASAP, and I wish you all a wonderful day, and I'll catch you on Wednesday. Y'all have a good one now. Stay rational. Peace.